We just wrapped up a great episode with our guest, James Ledbetter, who is a self proclaimed unconventional investor. And you're going to hear that come out in the story. He's got a lot of great tips for getting started in investing and, most importantly, sticking with it for the long run. Patrick, what do you think about today's episode?
As always, James, I thought today was an eye opener. It definitely goes to show you that if you stick with real estate long enough and just buy properties when they come up, save your money, that over enough time, you too can become extremely successful and build that financial freedom that we're all looking for and that this podcast is all about. So make sure to listen to the end. This entire episode is packed full of all kinds of great nuggets and funny stories. And here it is. How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
It's going well today, Patrick, and I'm excited about today's episode. I think we're going to be able to instill some hope in our listeners based on our prior conversation before coming on the air here. There's going to be a lot of great things that we're going to talk to with our guest, James Ledbetter. And without any further ado, let's go ahead and get into it. So, James, why don't you go ahead and introduce yourself to our audience and our listeners and tell them a little bit about what you got going on.
Hello, everyone. Again, fellas, really appreciate this time. This is time well spent, and feel like it's an honor to be able to talk shop. I'm going to use 4 words that I think describe me, describe me pretty well, and you're welcome to laugh. I'm untraditional, unconventional, unorthodox, and here's probably my favorite one, unsophisticated. And so those aren't accolades. Those are just 4 words, unwords that kind of describe my real estate investing journey. And I thought I would lead off with that.
Perfect. I like it. So say those 4 again. You got untraditional, unsophisticated, unconventional. What was the 4th one?
Untraditional, unconventional, unsophisticated, and unorthodox.
Unorthodox. Perfect. So, let's just go ahead and dig into some of that because, I think for anybody's path in the real estate, you have to have a little bit of unconventional thinking to end up here, going against, the traditional 95. This is what I do until I'm 65, 70. And then I could have a couple good years to retire while I'm, decrepit and old. It takes a different kind of line of thinking to get us collectively to where we're hoping to go and where we're at today. So, why don't we talk about your unconventional thinking in that regard and kind of how that's put you on your current path?
Sure. I think much like a lot of your audience, and it's great to be able to get on YouTube and educate yourself about education. You can get a free education about how to buy real estate, how to be a landlord, how to manage tenants, all that. And I was consuming a ton of that information, just trying to glean and soak in as much information as I could. I've been doing that for years. And I like the idea of, I'm not going to spend precious money to do this. I'm just going to try to find smart people like you guys and tune in and listen intently. So one observation I made early on was that so many real estate investors are very analytical. To their credit, they can analyze, they can do spreadsheets, they can crunch numbers in their heads, all that very effortlessly. That's the observation I made. I suck at math. I'm horrible. I can't help my daughters with math. And so I realized, does that mean I can't do this? And at first I panicked. I thought, I can't become a number cruncher. It's not the way I'm wired. It's not in my DNA. So am I destined for failure? Well, I guess I may have asked myself that question. And I guess through time, answered the question and realized I don't have to fit that mold. If that's not me, don't I don't have to make myself into something that I'm not. So I wondered, is this going to epically fail? But it didn't stop me from, going ahead. It didn't paralyze me. We've all heard about analysis paralysis. It didn't paralyze me. And I thought, okay, let me step out in faith. Let me make a decision and proceed and see what happens. And so years and years and years ago, back when in the 90s, I was 20 something. I was still living under my father's roof. I thought, maybe I need to venture out on my own. There was a house 3 doors down from where the house I grew up in, and it was for sale. And it was being sold by an elderly woman. It was like $57,000. And I thought, I had a job at the time. Could I get a mortgage and buy that house? That's all I knew to ask. I didn't know how that whole process works, but I thought, well, I've got to not be embarrassed, call a loan officer, ask them, hey, could you help me make an offer on this house? Do I even qualify to get a mortgage? And so I took that initial step. Long story short, or fast forward to today, I still have that property that I bought in the 90s in Central Texas. And I've rented it out for a number of years. For about the past decade, maybe longer than a decade, it's been a commercial rental for me. I rent it to a Edward Jones financial consultant. So I actually executed a commercial lease with Edward Jones. And so I've held it for all these years. I've resisted the urge to sell it, and I've got a business tenant. And again, I guess back in the 90s, it took me just, let me just explore this. And I just never sold it. I got married. I started a family. We moved to we lived in Central Texas for several years. Then we moved to Dallas. And practically every house that I have purchased, I've just decided I'm not selling it. I'm going to see if I can stick a tenant in there and see what happens,
So
and self-manage everything.
let's go through that process a little bit, because it's hard for me to wrap my mind around owning something from the 90s when I was born still to today. And you've held that one property and many others like it, I assume, for very long periods of time. And what's interesting to me is you've gone through a lot of market changes from the time that you acquired that property until now. Principally 2 massive bull markets in real estate, one crash that I'm aware of, maybe more in your region. How did you, mentally decide to hold through thick and thin for as long as you have and not sell or retrade these properties? Like, what was your thought process there for deciding to hold it for so long?
It's a great question. And maybe silly answer is maybe I didn't overthink it. I thought with any market turn down or big change in the economy, I did ask myself this question: can I just ride this out? Is there a way to ride this out? And maybe that's as far as I took it. And if I looked at a property and realized, hey, it's rented at the moment, and and maybe my tenant at this very time is paying rent in a somewhat timely fashion. If the answer to both of that was my tenant, I think they're a good fit for that property, and they're meeting their obligation of the lease, then I just thought, fingers crossed, maybe I can just do nothing and make it through this turmoil that may be going on around me. And that was, it was just a simple, hey, I'm okay at the moment. Can I withstand whatever may be happening around us? in the way of real estate, upheaval and things like that.
I think that's I just want to chime in real quick, and I think that's a really great way to think about it, because so many people get caught up in the quote unquote complexities of investing. Hey, I got to trade up, I got to get into multifamily, I got to do Airbnbs, I need to refinance, refi till I die and pull out that equity, to go buy more and more properties. And the more and more people that I talk to and we talk to that have just bought properties consistently over an extended period of time and done the basics, just like you said, hey, I have a tenant in here, they have a decent job, they're paying me rent most of the time on time. Like the deal made sense at the rents, then like it's going to make sense to not raise their rents and not try to maximize this property to its fullest potential every single time because it looks good on a spreadsheet and to a banker. And you can survive these tumultuous times by just sticking to the basics. And I'm really looking forward to getting into your story, because it sounds like that. Just stick to the basics, just be consistent, and have a little faith, and things most likely will work out, because real estate's very forgiving.
Patrick, that's beautifully said. And again, because I'm simple minded and I'm not, um, you know, yeah, I can't if I complicate things for me, then real estate would be very unappealing. So I have stuck with that very simple approach. Are there other philosophies and other ways to be more creative? Absolutely, but I have to do something that fits me, fits my personality, and maybe in some ways fits my strengths and plays down my weaknesses. And of course, has it been a pleasant, has every real estate story that I could talk about, have they all been pleasant? Of course not. Of course not. That's not reality. But I've learned to say, hey, you know what? I can I can I'll be patient with myself, and maybe there's resolution, and I work towards that resolution. And I try to learn obviously from my mistakes, which are many.
That's fantastic. That's really fantastic. So just for everybody that's listening right now, let's take a quick fast forward into current day. What does your portfolio look like? And then we'll backtrack and start talking about, how you were able to build this up. So what does your current portfolio look like today?
Awesome. I've got my portfolio consists of 10 residential rentals. These, Patrick, James, these are just average houses. They're certainly not upper end market houses, and they're certainly not, um, uh, properties that would be below the medium. I have found my sweet spot, and I know what I'm comfortable with, and I know what kind of tenant I'm looking for. So 10 rentals, and then two additional properties. My first property that I bought back in the 90s, that's got a commercial tenant in. And my 12th property is my current project. And I'm trying to once again replicate what I did back in Central Texas. I bought a property a little over a year and a half or so ago. It's not in my backyard. It's about 2.5 hours away. And I was able to get it zoned from residential use to commercial use. So my goal there with my 12th property is to hopefully rent it out as well to a small business, maybe a realtor or an insurance agent or another financial planner, but some business tenant. So 12 properties in total.
Well, let's cue in on that last one, because that's kind of interesting and against the grain of what I don't know if we've had anyone really discussing converting properties to a higher and better use through rezoning. And I know that I'm looking at a project myself, trying to get a variance for a code ordinance that we have for something. Haven't followed through with it, been putting a plan together. But why don't you talk to our listeners a little bit about, what the rezoning process looks like and everything that's involved with that?
Sure, sure. Happy to do that. And again, I may have, I know I wanted to acquire another property, and I knew that properties here in North Texas were, in my estimation, way too expensive for what I'm used to, for my budget, et cetera, et cetera. So I cast that net kind of wide, and I thought, okay, here I'm here in North Texas. I've already got four properties that aren't in my backyard. I've got two in San Antonio. That's 4.5 hours south. And I've got two in Killeen, Texas, which are a couple of hours away from where I reside. So I already got past gosh, could I buy a property and self-manage it if it's not in my backyard? Well, I've been able to do that with these two San Antonio properties and the two other properties I mentioned. Is it more challenging? Of course, because if I have a problem with a tenant here in North Texas, I can go knock on the door and say, hey, it's James. Hey, what's going on with rent? Or let me look at that toilet issue you're having. If I hear from one of my San Antonio tenants, I have to hire somebody to go do that. Or worse, if a tenant isn't paying and they're not answering their phone, I can't be there in 45 minutes. I've got to drive 4.5 hours. So it's challenging to have properties outside your backyard, but I've weathered that. This property, this commercial property, it was very inexpensive, $125,000, occupied by a nice elderly woman. And I thought that same property, $125,000 for a house built in the 50s or 60s, that would be like 450,000 up here in North Texas, easily. So I thought, this property in East Texas, I can afford. And I made an offer through the listing agent, and I put 20% down, and I got a loan. And then when I was first looking at the property, I thought, this is sitting on what appears to be a very busy street. And right next door is a chiropractor's office. And right next door to that is a realtor's office. So I thought, it's already kind of mixed use. This elderly woman is living there. She's lived there for decades, but it's already kind of in that transition period to mixed use business use. So after I bought the property, I thought, yep, it's residentially owned. If I want to rent this to a business, I'm going to have to talk to the city. So I reached out to zoning and planning and started that conversation. And they said, James, if you want to propose, a zoning change, here's the form you need to fill out. James, now that you've done that, you're going to have to write up we're going to have to ask all the neighbors around your property, do they agree to this zoning change? And subsequently, I had to make a lot of trips to East Texas, 2.5 hours away, stand before city council, stand before zoning and planning, and just say, hi, I'm James Ledbetter. Yes, I purchased this property, and I'm hoping that you guys will allow me to change the zoning to business use so I can move in a quiet, business profession. Now, the interesting thing is all the neighbors around my property, they were opposed to it. They said, James, you seem like a nice guy. Nice to meet you. And they were salt of the earth people. But they just said, please understand, how does that help us? If you open up a nail salon or a vape shop or a tattoo or an adult bookstore, and really quickly I realized, hey, put me in their shoes, I would feel the same way. How does this bring value to this nice little quaint, neighborhood if I put a business in this house? So I was very sympathetic, and I essentially said, hey, let me prove to you that I will make good on my promise to not rent to these types of businesses. Thankfully, the city itself, the city of Kilgore, Texas, in East Texas, said, James, believe it or not, what you're doing is in our economic development plan. This is part of our long-term plan to have all these homes on the street where you purchase this house to eventually be business use. So I got very lucky. Because they could have voted it down, in which case I would have realized, hey, I bought a house that I can't do what I would like to do, and I guess I'll have to just sell it. I did go into it with no intentions to renting it out to a regular, residential tenant. It was, hey, if I can do this and put another business, put a business tenant in there, awesome. If that falls through for whatever reason, I'll sell the property, wash my hands of it, and move on.
I think that's great, because I've had to go through that same process without trying to change the specific necessarily use of the property, but get confirmation. I bought a triplex that was only in an area zone for a duplex and had to get non-conforming. So I had to go through the planning process for that. I had to do my 10-unit property. We had to go and, do the same thing, and just get all of this confirmed through the different counties. And it was the exact same way that you talked about. You call up, you say, hey, this is what I have. What do I need to do? Fill out this form, do this hearing, provide this information. They give you all the things you need to do. And it's just your job to go out and fulfill and check all of the boxes. And if you're able to check all the boxes, 9 times out of 10, you'll get approved. It's when you're unable to do those things is when, unfortunately, you can't get approved. And you happen to be, like you said, in an economic development zone for this particular area. And now you're kind of the business on the forefront of changing the whole dynamic of the street. So I think that's really amazing. And I love how you said it's just one step at a time.
Yeah, and I think I had some good fortune, no doubt about it. And I told my wife, I told myself, hey, if this doesn't work out, it wasn't meant to be. And I felt like I bought it at a decent enough price that if I had to just walk away, I could do that, not lose my shirt, not be critically wounded from this purchase that went nowhere. And so, yes, I'm still, in fact, I just executed, even though the house isn't rent ready just yet. I just executed a leasing agreement with a commercial real estate gentleman in East Texas who said, James, I'd be happy to market your property and help you find a tenant. And I'll pay him his commission. And then I told him, look, I don't need professional property management help. I'm a glutton for punishment. I take all those calls myself from my tenants. And then here's the funny thing, Patrick and James, I am not handy in the least. If I screw a light bulb in correctly, I get excited. So my abilities are very, very limited. But I've just thought, you know what? I don't care if my tenant sends me a text at 3 a.m. in the morning and says, the hot water heater has busted or something like that. I can call a plumber. I can call a handyman, and obviously I don't, with the fact that we live in the 21st century, our tenants can pay us any number of ways. So I don't need a property management company to collect rent for me. So am I against property management? Of course not. Of course not. It just hasn't been my approach. So I self-manage all of them, and hopefully this East Texas venture will go well, and I can secure my second business tenant.
I think for anybody who has the patience to just figure it out, can manage their own properties. I mean, I think the worst thing that can happen, which is an emergency, is something water related. And to that effect, you just need to know a plumber that has 24-hour service in case it's an emergency. Aside from that, pretty much everything can wait unless the house is burnt down, in which case there's really not much to do anyways. But, aside from that, I'm kind of curious about this project that you've got going on. As you were talking, transitioning it from a residential property to a commercial property. What is the difference in the lease rates, like the rental rates that you were going to get either as a residential versus getting commercial tenant in the property? Like what's the delta there?
Well, and I'll tell you again, I'm just, uh, proving my point that I am unsophisticated. I might have average smarts. That's even questionable. I realized, okay, this house is affordable, and I think I'm going to go for it because when I look at it, I could see a business using this as an office. And so that was the catalyst. That's what made me make an offer, a full price offer. And then when I got it, I'm like, oh my gosh, that was too easy. Now I own a property. And then started the whole, changing the zoning stuff. But back to your question, when I just executed this lease agreement, I think it was yesterday, the real estate, the commercial leasing real estate guy said, James, what would you hope to rent this property for? And my very honest answer was, I have no idea. I don't know what market rates are. I know that, my mortgage on this property is manageable. By the way, just side note, I cashed out a home equity line of credit that I have on my property, the house where I'm broadcasting from, my residence, to pay cash for this property. So I used a line of credit, maxed it out, $125,000 to purchase this property, this latest project. But when the agent asked me, what do you hope to get for it? I said, look, I have no idea what market rates are in East Texas. So I said, I'm going to lean on your guidance, your expertise, your experience to tell me, what I could get square footage wise. So he and his partner made a visit to my property. I gave them the code so they could get into the property, walk around. And then they, later that afternoon, we had a conversation. And he said, I think you could get anywhere from $1,500 to maybe $2,400 a month as a commercial space. And I thought that sounds great to me because my HELOC payment is like, $700 or something like that. So I'm like, hey, there's cash flow. That sounds wonderful. But again, I didn't do. Again, it's kind of pitiful that sometimes I leap before having all the facts. But it looked like a viable property. The economy there in this town didn't look like it was in retraction. And so I thought surely someone would like this space, like this visibility on one of the busiest streets in town. They can bring by clients. And when I heard that possible lease rate, I got excited.
Exactly. What do you think it would have rented for as a residential? Like if you had to if the market turned and you didn't want to sell it, like what do you think it would have rented for if you just threw a tenant in there to get you through,
Sure.
until it.
Well, it's just a 3-bedroom, 2-bath house, brick house, single story. Location is great. If I had to take a stab at it, Patrick, I'd probably say somewhere between 1,200 to 1,500 a month, probably somewhere in there. And what's interesting is all my rental properties, including the 2 in San Antonio, including the other 2 in Killeen, Texas, they're all in that space between 1450 to 1725.
Okay, 1450
So
to 17 and a half.
so uh, um, that, that's just the sweet space that I've this with you. Every house that I have purchased, a HELOC to fund the property, I called every I feel like I've called every bank in the country, filed bank after bank after bank after bank, and said, "Hi, I want to make I want to purchase a rental property. I can put 20% down. Would you do a loan for me?" And so I just kept making calls to banks until I found local banks that said, "Sure, James, if that property you're purchasing appraises for, if we think it's worth the value, we'll do a loan for you." All my properties are in my name. Again, back to that unconventional, unorthodox. You pull my credit report, you see all those mortgages. You see the ones I've paid off. You see my outstanding ones. They're all in my name under my social security number. Would maybe a large majority of real estate investors say, "Gosh, James, that is so foolish"? I think they would. But I haven't incorporated, I haven't done LLCs, I haven't done entity, I haven't done any of that. They're
Well, to
just
that
all.
point, though, I can't count how many times I've talked to investors who make that their number one concern. And a lot of times, where are they at? They haven't bought a damn deal yet. I think you're a great testament to the taking action ethos that Patrick and I try to instill in a lot of our listeners. Is there's a lot to be said by kind of, you don't want to be ignorant to the risks, but putting blinders on and just getting something done to get yourself going in the right direction. And look at you now. You've got 12 properties, 2 commercial, 10 single families. They're cash flowing. You've been in a good spot. You've been doing this since the '90s. You've been building an incredible amount of equity. And the proof is in the pudding here. And you've clearly establish yourself as a knowledgeable, despite what you might say to the contrary, investor, a successful investor. So it works. And I think the theme of this conversation is keep it simple, stupid. Don't overcomplicate it. And that's definitely what real estate is as Patrick said earlier, it's very forgiving. And that's just the nature of the business. So, let's talk about your other, 10 single family properties that you have. I'm curious, you've been buying these properties for a long time. Do you own them outright? Do you have a nominal loan balance on them? What's the financing situation with your entire portfolio?
Sure. Well, I kind of told you, yeah, I don't do creative financing, and I know all those systems can certainly be effective. I just haven't leveraged any of them. Thankfully, I have and I'm eternally grateful. I've got a day job where I can work 4 days out of the week from home. And so, because we're a family where we've always tried to live within our means, and because I'm not like, "Hey, I need to buy a boat. I must have a boat," or something, some toy. I'm a pretty simple guy by nature. So every time I've had money that we've saved up, I've thought, is it time to go house hunting? And again, then call those banks and say, hey, I'll put $35,000 down. Will you do a loan for me? I'll put 20% down on a $145,000 property. What was your question again? I want to make sure I get to the heart of it.
Yeah. What does your total, financing situation look like now with your entire,
right.
yeah. Okay. So like, basically how much leverage do you have? Like, are some of the properties paid off? What does that look like?
Sure. Okay. So present day, I've been able to, and again, just living, within our means, and because of my day job, I've managed to pay off our property and 1, 2, 3, 4 rentals. So 4 rentals paid in full. And the most recent one I paid within the last 60 days. And it's awesome. I thought, you know what? Let's just pay that thing off. And we did. Do I get reminded every year that even though we own these properties outright, that property taxes here in Texas are horrendous? Yes, I get reminded of that. But again, 4 properties free and clear, 5 properties if you count our primary residence, and I just want to keep this momentum going. So I've got another property. I'm like, you know what is the balance on that? I owe $80,000. Every time I've got an extra $5,000 or whatever, I'm just going to throw it at that balance and start whittling away. And then maybe before too long, hey, we can pay off another property. So owning these, while I still have outstanding mortgages, and I get reminded of that every month, I've systematically just been able to, okay, is there, do we have enough cash flow? Do we have enough savings to where I could aggressively keep whittling away at these outstanding balances?
I think that's fantastic.
I've got 5 loans through one bank, one Texas-based bank did 5 loans with me. I remember going back to them for a 6th loan, and they said, James, you don't even have a deposit relationship with us. 5 is the most we'll do. So then I had to get on the phone and start calling other banks. And I found a bank that said yes. So I put the 20% down. I get the mortgage. Most of these loans, guys, are ARMs. In fact, that's the only kind of product I could find. They're adjustable rate mortgages. Have I had some of those loan payments go up considerably over the years? Yeah. But I've just thought, hey, the payment went from 700 to just over 1,000, but my rent is 1,550. I'm still okay. I'm not in a panic mode. I'm still okay. And, it's just a reminder that, hey, yeah, your loans can change. Your taxes can change. Your insurance can change. But, don't panic if you don't have to. And again, I would love to just keep this snowball effect going, and maybe in a year I could pay off another balance.
So I kind of want to get into that because your primary is paid off. You got 4 other rentals paid off. Hope you're planning on having another one paid off here in, let's say, the next 12 to 18 months. Like, what is your ultimate goal? You've been going at this for close to 30 years now. You've got 12 properties, 13 if you count your home. Close to half of them are paid off. Like, is that the goal, to pay off this 12 portfolio, and then sit pretty in retirement? Or keep buying? Like, what does that look like? Let's dive into that a little bit.
I spend a lot of time thinking about that. And I think an honest answer is that vision isn't clear. If but it is fun to think about what should be my strategy. Should I stick with this game plan, with this very simplistic game plan, or should I, as many experts would say, tap that equity? James, you've got all this trapped equity in these properties. You need to unleash that capital and buy a dozen more houses. Could that be in the future for me? I guess it could be. Although I may just stick with my comfort level and keep doing what I'm doing. Or if I feel like, hey, that should be smart. Patrick, if I decided to, hey, do I know anything about multifamily? The answer is no. Would I have to really try to educate myself? Absolutely. Or find a partner to do a venture like that with. So I guess the future is unclear. I do know this. There have been some very positive things. My net worth, if I cashed out right now, I would be sitting on a pile of cash. That's nice. And I know that, well, if I went out and got 3 other jobs in the evening, that's no substitute for, I know I couldn't do this in the corporate world. And I don't know if I'd want to make that sacrifice. So I'm grateful that I have my day job and grateful that I can still pursue this passion of real estate, which hasn't killed me yet. Is it full of challenges and challenges? Yeah, absolutely. Do I hire clowns all too often? Yes, I've got to stop attracting clowns. So hire less clowns is one of my goals. And with every bad tenant experience, I've realized, James, you've got no one to blame but yourself. You saw the writing on the wall. You didn't trust your gut. Maybe you asked to a tenant that had no business occupying your property. So it keeps me when I continue to make mistakes and realize, inspires me when I realize, gosh, I got rid of a bad tenant and I can pick myself up, I can dust myself off and live to fight another day. But again, I feel good about our net worth and all that. The future is unclear. I did try doing a flip once upon a time. We could do another interview about that, where I thought, oh, this is I'm going to hit a home run. Well, I think I got thrown out at first base. Did I lose my shirt? No. Could have was I left with some debt? Yes, some credit card debt. But again, that made me realize, hey, James, don't assume that just because you've had some success that you now know how to flip a property. And this is a no-brainer, and you're going to make a nice return. I was sorely wrong. I had to apologize to my wife and said, hey, this could have been a lot worse. My apologies for just going in with too much gusto and thinking that, I'd have that Midas touch and could turn everything to gold.
Mm. And we've had similar conversations with some past people that have been on our podcast too. Specifically, if people want to go listen to our log tapping episode. It's a great testament to being a little overconfident at times. Once you get going and get some momentum building, sometimes things look a little shinier than they really are, especially when you're digging into some new territory. And, I found myself really cracking up at myself at your comment about hiring fewer clowns. We live in clown world these days. No one's going to disagree with that. I think that's super true. But, I think there's some pain points that maybe we could chat about. In clown world, when you're dealing with some of these people, like who are these clowns you're dealing with? Are they contractors that you've been outsourcing some work to? And let's talk about some of those pain points because self-management, self-care of your property, not always an easy thing to do. There's some headaches and road bumps along the way. So let's talk about those clowns a little bit.
Happy to, and I'm smiling because so many good stories, so many funny stories to share. I think even if I was a billionaire, I I I enjoy pinching pennies, and I will call 15 different HVAC companies to see if I can find somebody who's, hey, so you're not trying to sell me a new $15,000 unit. You seem to think that you could breathe new life into this AC unit that is old and has a lot of wear and tear on it. But can you get me through the summer? Can can we Frankenstein this thing back together and keep my tenant cool, but buy me some time? So I often try to find those types of people. But does that sometimes draw clowns to you? Absolutely, because a fast talking guy that seems to say all the right things. I have way too often said you're my guy, and then realized, oh gosh, not only did they not solve my AC issue or my roof issue or my hot water issue, they've opened up Pandora's box, and now I have to spend more money fixing their issue. So I'm trying to really just learn that discernment. Hey, this guy is super cheap, and yet he is a professional, and he's not a clown. And but I have certainly struck out in the past and been a clown magnet. And again, you learn those lessons. You learn to listen intently. But when you do find a person that is cheaper, I like that. I think that's commendable. It's like, you could call and pay full retail price. Is there a way to save money on this said repair? But yes, I've had lots of clowns. I maintain a physical list of people that I've used once or several times. Sometimes I'll have a guy and I'm like, boy, I sure hope I can call on him again, only to realize his phone's disconnected, or he took a regular job. He stopped doing the handyman work. So I'm always striking people off that list and adding new people, and trying to find reliable guys that think outside the box. And I tell them, I say, listen, I may not be able to afford you. Don't get offended by that. I'll let you know what my budget is. If that's acceptable, great. If it's not, no harm, no foul.
I love that. I love that strategy. I also wanted to ask, have you had any success finding any other investors in the areas that you have properties and kind of piggybacking off of some of their resources? Because I know one of the big things that's helped us out is by making those connections with other people that own properties in my area. And we kind of, if you get in a pinch, you can call on one of those guys and say, hey, who would you recommend to fix this for me? Whether it's a HVAC, electric, plumbing, or something like that. And I've been able to find reliable people that do good work at a decent price. It may not always be, bottom of the barrel cheapest, but it's a price that we've been able to live with and know that we're getting quality work. So have you had any success with that or recommend that to people?
Patrick, I think I need to develop that skill, truly, because I haven't deliberately, the times that I have interacted with others that might own a few properties or have a pretty substantial portfolio have just been chance encounters. Sometimes, or with my properties that are here locally, just 2 weeks ago, I had to rent an auger, and I thought, you know what? I'm having to find a hard time reaching any of the plumbers that I've used in the past. I'm just going to go rent an auger and see if I can figure out this stopped, this drainage issue that one of my tenants was having. So while standing in line at the tool rental place at Home Depot, I struck up a conversation with a guy who actually owns 3 properties. While we were checking out, he was renting a chainsaw, I think, for one of his rental properties. But no, I need to be more intentional about that and try to build those relations. There are here in Texas, in North Texas, some very reputable real estate groups that have membership, that have, they in fact, they tell you when they're soliciting joining them, you'll have access to our list of great vendors and insurance people and, professionals that can do everything from roofs to flooring. I've listened casually to those free webinars and seminars that they have, but I've never dipped my toe in that and joined any of those organizations. And not because I think I'm smarter than them. I think it's just I haven't been intentionally doing that. But I'm glad that there is a community out there that I could probably tap into with relative ease. And because I hear their radio shows being broadcasted on the weekends on AM radio, and I listen to their case studies, and I listen to them, and I glean from them that, hey, these are people just like me. They've got a passion for this. They may have a very different strategy, philosophy. They're likely a lot more, they're brighter than I am, but we have a lot in common. And we have the same pain points from time to time. But I think most of my guys I have found, Craigslist. I keep going back to Craigslist because or OfferUp or Yelp, and I'll rather than get a call from from a property management company saying, "Hey James, we had to do this, and here's the bill." I'd rather find somebody on Craigslist, see if I can save myself a couple of $100. And is it a roll of the dice from time to time? Of course. But therein lies the fun part, trying to trust your gut and say, hey, is this guy a clown, or are they worth doing some business with? In like manner, some of those people will say, James, I was very skeptical about you in the up front, but I see that you paid me, you're a man of your word, you actually own that property, you're not some scam artist, and hope you'll keep my number handy. And I, in like manner, say, hey, you'll be my go-to guy. So, and I'll say something like, I hope I don't have to call you for another year, but if I do, I know that we've already got a past, and I can trust you to actually show up and do the work that we discussed.
So let's talk about the bigger picture with James Ledbetter a little bit. What's motivating you, my friend? Like, why have you decided to stick with real estate all these years? Like, where's it taken you, and what's kind of the end goal with, sticking with it for so long? What's your motivation here?
Sure. That's an awesome question. maybe I'll answer it this way. I tell my wife and my two daughters, um, you know, even though I like this, and enjoy this for some strange reason, um, please know I could think of other hobbies. And so I tell them, I'm doing this for y'all. I'm trying to build, somewhat of a legacy. I've got a daughter that just graduated from high school, and I've told her, hey, sweetie, um, you know, you might feel very anxious these days, not knowing, hey, do I want to go to school? I don't want to go to school. Um, I don't know what I want to do. I know what my passions are, but it's a big, scary world. I told her, hey, sweetie, please know you're just nervous, worried about things, the world, and everything else. So don't worry about that. That's normal to feel that way from time to time. But I tell her, you're unencumbered and you're only young once, and this is a unique period of time. So you've got me and your mom there to support you with whatever direction you want to go. But I do remind her, I'm doing this for y'all, because if I got hit by the proverbial beer truck tomorrow, and I've had lots of meetings with my wife to say, hey, let's talk about this kind of stuff. If I disappeared tomorrow, we're not, I'm grateful for every day. We're not promised tomorrow. And my faith teaches me that, hey, this is just a temporary place. So I'm doing this for them. And wouldn't it be great to have one of my daughters, years down the road to say, Dad, teach me about this real estate stuff. So we have all these properties paid for, and we get all these checks we get money through Venmo and Zelle and Google Pay every month. Yes, we do. And you've got to call a plumber or, a handyman ever so often. Yes. And so it would be selfishly, it'd be cool if one of my daughters said, hey, I might want to know about this. I may want to learn the ropes. And I'd be there to tell them, sweetie, you're smarter than your dad. You'll be great at this. Don't think that you're not smart enough to do this, and hand the reins over to them. I've also told my wife, who this isn't, she's excited what we're building, but she wouldn't want to mess with this. So I've told her, hey, I would hope you would mourn my loss. And but please know, these properties could sustain you for a lifetime with cash and stuff. And please know, or if you just wanted to wash your hands of this and say, I want no business, man, doing what James has done all these years, you would be fine from a financial standpoint. So whether you hired a management company to manage all these to where they're just an afterthought, great, you could do that. If you wanted to sell them, here's a realtor that could make sure that I know is going to, make sure you get maximum value, maximum return. Here's an investor that could park those funds to where you would have enough money to live off of, month in and month out. So that's my motivation. It is fun. It is great acquiring another property. This project that I have on, I can actually see the light at the end of the tunnel as, hey, this commercial real estate guy thinks I can rent this. But right now, I feel like 12 is enough. And right now, paying down those balances sounds awfully appealing. And just trying to keep my tenants in these properties sounds great. I will go out of my way to keep a tenant that I think is decent. If a tenant calls me and says, hey, James, I am going through a really difficult time, will they find empathy in me? Absolutely. If I realize if I'm like, hey, you know what? I can wait 3 weeks for rent. Or why don't you pay me half rent now and half rent at the end of the month? I'll accommodate them. Does that sometimes, do people take advantage of me? Of course. Um, so I'm not trying to be a doormat. That's not, and have there been times when I've actually had to tell some tenants, hey, you have painted me into a corner. I'm I'm going to go on the offense and it's not going to be pretty. You need to vacate my property. If you do that in a timely fashion, I'll I'll rent you the U-Haul truck. I'll help you segue, but you cannot take advantage of me anymore. And thank God with that kind of strategy, being very clear that if you've almost worn out your welcome and I'm about to go on the offense and I'm going to make your life very difficult and drag you into court. And I said, I take no pleasure in that. Usually people, the ones that are smart, realize, you know what, James, thank you for, um, allowing us to segue somewhere else. And then I realized, hey, I've never had to evict anybody. I've never had to go down that path, which is great. Cash for keys. I remember, that term, cash for keys. I did that before I even knew what that term was, where I was like, hey, I don't care if they feel like they're extorting me. If I need to pay them to leave and to be out of my property, so be it. So be it. And because I was measuring success that they're out of my property, you know, I can I can I can rise again. I can rise again. And the goal was getting them out. And if they got the upper hand, so be it. And if I had
Oh,
to,
I
yeah,
totally get you. And I kind of wanted to interject here because we
sure.
were, you know, I absolutely love the motivation aspect of setting your family up, your daughters up, yourself up. I think that's fantastic. I think that's what majority of investors and people listening to this podcast are trying to do for themselves. And I was gonna get there about asking you for, your number one piece of advice for people looking to start. And I think you kind of answered that, you know, by having a bit of empathy and by treating people, you know, with the utmost respect and giving them the benefit of the doubt up front. And sometimes you are going to get taken advantage of, and everybody will, especially when you're a newer landlord, because you do just want to keep people in your properties, and you do want these families to call your properties home, and be able to make a little bit of profit on it. And you also don't want to ruin someone's life by going through an eviction and having that on their credit and making it harder for them to find a new place to live. So, by doing that cash for keys and by somewhat going on the offensive, but still having a heart and saying, hey, look, you need to vacate my property. I'll even pay for the U-Haul, but we need to figure this solution out. I think right there is the perfect piece of advice for someone starting out or even considering on building their property. It's, your journey, which is keep your head down, keep focusing on doing the basics, buying properties when you can, starting to pay them off when you can. And over the course of 10, 20, 30 years, you're going to build a giant nest egg that you wouldn't be able to do if you're working 2 or 3 jobs and just putting in that 30 years of life. And you know what? I really commend you for that. I think the listeners have gotten a ton of inspiration and motivation out of that. And I really think that this is a perfect segue into our next segment of the show that we call the Big
Big
Four.
four. All
James,
right,
take it away,
James.
sir.
James, I want you to tell our listeners something that you've done in your personal life that's like a financial independence hack or a cheat code to really help propel your finances forward.
I would say, and maybe, a large part of your listenership can relate to this. Um, I, and I'll just repeat something I said earlier. Um, I think with each passing year, I've realized that my happiness level is not predicated on having stuff. Um, and it's the simple pleasures in life. It's having a great spouse, and having a family unit. So those intangibles have become, the having stuff just isn't important, and that hasn't led to happiness. And I don't think you can find ultimate happiness that way. So with that in mind, as it relates to real estate, and this gets back to me being very unorthodox. I'll use that. I'm always looking for ways to cut expenses. So one of those hacks, a couple of different hacks I'll share with you, and hope that you don't grimace too much. When I'm looking for tenants, I don't pull credit reports. Say I save money there. I actually ask them, is there something on your credit report if I pull it that we need to discuss? Is there something in your past? Is your credit good? Is your credit bad? If they tell me their credit is bad, I certainly don't need to pull it to confirm that. I'll tell them, hey, so that I don't have to run a expensive background check, is there something that we should discuss that you've done? People are transparent. People will say, James, in my younger self, I did this, and I've paid that price, and I'm a different person now. So I've tried to cut down some of the expenses associated with just getting a tenant. Also, because insurance can be very, very, very expensive from time to time, on the houses that I have paid off, I can't do this with the houses that I have mortgages on. They require you to have, a landlord policy. If you drop that, they're going to get notified. But on the properties that I've paid off, I'm just self-insured. So, could I have a claim, and could I be, crying in my beer that, oh gosh, now I can't file an insurance claim, because I dropped my policy? That could happen. But I kind of like the idea of, oh, that's 4 more annual landlord policies that I don't have to pay. And I'll stick that money in an account. And so if I have a roof issue, and let's say a patch won't work, and I've got to actually replace the whole roof, which I recently did on a property, I'll pay cash for a roof. That roof may cost me $6,000. But if I've got it, and I've got a guy that I trust that will re-roof a house, I'll just pay out of pocket for the roof. So I've dropped my landlord insurance policies on the properties that I've paid off. Also, on the properties where I have to maintain a landlord policy, I get the most stripped down, no coverage for hail and wind, which is crazy here in Texas, but I'm a gambler. And so I'll tell an insurance agent, hey, I don't need to be insured for every peril under the sun. I'm sure you have real estate investors that just want that peace of mind so that they can sleep well at night, knowing that they're insured for lost rents and all that. I tell them I want the most basic, bare bones policy. How cheap can you get it for me? So I'm kind of I'll shop and shop and shop and shop, trying to find the cheapest price for homeowners insurance. Let me see if there's another hack I could share with you.
James, I was going to say, true to your intro, man, that is unconventional. But I've always had this philosophy on insurance. Don't buy insurance on things you can afford to replace. So that's an obvious thing that shouldn't be overlooked by somebody who's getting their first rental property.
Sure.
But there might be a business case to be made for where you should either limit or maybe not have coverage on certain things. But I always bring it back to my auto insurance, for example. I can pay to replace my piece of crap car very easily. Not a very valuable machine. I can't pay to replace another human body if I happen to, be distracted and whack somebody. So like I need that covered. Other because I can't afford to really replace another human, but I can replace my personal property. I don't care if I lose that. So, insurance, it's always a business decision. People are going to make different decisions with that regard. But I think that's a really interesting philosophy. I've never heard of anybody doing that, but everyone
Well,
weighs the risks differently.
right, right. And again, yeah, unconventional, unorthodox. Um, Maybe you could say a lot of people would say that is unsafe, but maybe at least I'm making the decision consciously. And again, like you said, weighing that risk and thinking about, does that make me wince, or can I live with that associated risk? And it's different for every person. So yeah, there's different philosophies, different ways of looking at something. Oh, let me share this. I don't um, when I have a property available, I don't collect a security deposit. And so that usually makes my phone ring off the hook. People will be like, hey, gosh, no, we'll take it now. And I explained to them, I do have a vetting process, even though I don't collect a security deposit, zero out of pocket to get into my house. I do have a vetting process, because some of them are like, tell me where the keys are, or I'll move in tonight. So I avoid those clowns. But here's something interesting, and I will tell them. Let me explain when I list one of my properties on Zillow, and that's where they all are. I'll say zero deposits, zero security deposit. I tell them, here's the information because people are very skeptical. What do you mean you don't collect a security deposit? I'll tell them, hey, I'm going to collect 1 month's rent up front like a security deposit. But if you make six on-time payments, I'm going to turn around and give it right back to you. And then it is wonderful when I have found the right tenant, when they text me or call me and say, James, I can't believe how fast time flies. Can't believe we've already been here 6 months. And we wanted to inquire about getting that rent back, getting that security deposit back. And I tell them, hey, thank you for making rent a priority, for keeping your word and making it a top priority, and for paying dutifully for 6 months. The money is now back in your account. I just Zelled it back to you. I just Venmoed it back to you.
I
It's
think
when
that's a really interesting type. I think that's a really, really interesting way to go about it, to get people to pay on time and to get people to get in. And
it is
again,
a carrot. It is a carrot for
super,
sure.
super unique. Haven't heard a couple of these from anyone so far, but I do want to kind of continue along to our number 2 question on the big 4. And we call this one resources. So, are there any particular, books, podcasts, or people that, over your journey have kind of shaped your philosophy, mindset, or just overall kind of strategy, and kind of kept you on the path to doing what you've been doing, that maybe our listeners haven't heard from and it could benefit them?
Sure. This isn't going to be an untapped resource. For me, truly, it's been guys like you that I realize, hey, here's a video. Here's so much content at my fingertips that I can consume anytime and consume for free. And I'm not having to make a huge outlay of cash. I'm not having to buy a system. I'm not having to buy coaching. I'm not having to buy a mentor. And just, yeah. And in fact, it's been empowering to say, hey, what I know they're teaching over there for a high premium is truth and is good. And I've just learned that same know-how for free. that's been great. So the free education that YouTube and podcasts and videos offer, that's been a world of that's been an invaluable source of wealth for me, because there are times when I'm like, hey, that's interesting. That's a really unique perspective. That doesn't fit me. It doesn't jive with my personality, but I'm glad to know about that. It just gives me a fuller picture of there's more than one way, as the saying goes, to skin a cat. And
Exactly.
so that's been my joy. So no book. Obviously, reading is so invaluable. I don't do enough of it, and maybe that's one of my um, shortcomings, and I need to do more of that. And I'm a big believer in, and I'm sure you guys subscribe to this too. Don't take your advice from people that can't manage, have no track record of doing things successfully. Listen to the people that have demonstrated some know-how. Doesn't mean they have to be, the definitive upper tier people, but just people that are speaking from a place of sincerity and trial and error, and because they have something to share, and it will help you build out a wealth of information. So I've consumed so much of that, and I think that's what has kept me encouraged during the not so good times, maybe when you're having issues with 3 or 4 tenants all at the same time, or you've had a month where, gosh, why is everything breaking at my rental properties?
Mm-hmm.
It's helped me to just, hey, James, it's okay. You can weather this. You'll get through this and stay the course, and not throw up my hands in desperation and say, I'm done with this. Um,
And
so yeah,
I think that's a great point. And there's a lot of great resources out there and available for everyone to go look at. I know Patrick's Instagram page is a wealth of knowledge in itself, and there's an investment course
unquestionably,
just included in
yes.
that. But James, I wanted to ask you, where are you going to be 5 years from now? Where's your personal life? Where's your business life? I'll let you take either direction you prefer to go.
Sure. I would say, if I stick with the path that I'm on now, and simply stick with that strategy alone, um, heck, I think it's plausible that I could have maybe 10 out of 12 properties paid off, paid in full. Do I? And that would be awesome. Um, and um, and then wondering, well, what do I do now? I'm in a great position. What what what's the game plan, if anything? Um, Now, do any of us have a crystal ball, and can we know what lies around the corner? Of course not. So I would say, I I think there's a part of me that's always saying, just get to just everything you do, try to insulate yourself from rocky times. So again, if I had more properties paid off, if let's say things got really bad in our country, God forbid, and you know, could I afford to drop the rents considerably and still survive? I could do that if needed. Would that be a crazy strategy to some real estate investors? Of course, they're always thinking about raising rents. Well, if I didn't want my property sitting vacant, could I get by with substantially less rent? Of course. But of course, there's what kind of a tenant would I be attracting at a severely discounted rent rate? So hard to know what my future looks like. I hope um, that it's full of fun stuff where I can learn new things. Maybe I could dip my toe in multifamily. I don't know what that would look like, but maybe I could surround myself with smart people like you guys and let that be an adventure and see what the future holds. Again, maybe setting things up to where if one of my daughters wanted to take over or if they express some interest, I could show them how to do this. We know that nothing's getting cheaper. So I've got to think, um, do I, if I wanted to add to my portfolio, and now that I've bought properties outside of my backyard, should I continue to look for properties that that seem more affordable for me? I've never ventured outside of Texas. That would take a leap of faith. Is that out of the question? It shouldn't be. I shouldn't
Well,
limit myself that much.
it sounds to me like you've got a lot of options and you're thinking about a ton of different things. And it's just, we're just going to see what happens day by day, month by month, year by year, and just stay on the course that you've been staying on. So I think that's really fantastic. And that leads us perfectly into our next question, which is, if anybody has been motivated, a little bit more educated, a little bit more inspired by you and your story, where can they follow along, reach out, ask you questions, like let the people know where the best place to get in touch with you is?
Sure. Well, I would be, and again, sounds foolish, but I would be perfectly comfortable with sharing my email address, with sharing my cell phone. I did that some time ago, and this is interesting. I actually got two emails from two individuals, perfect strangers from overseas, and they wanted to buy real estate in the Texas area. And they just said, James, can we pick your brain and ask you what do you think about this market or that market? I was humbled by that. I'm like, oh gosh, here's somebody that wants to dip their toe in real estate. They're halfway around the world, but but they feel motivated enough to maybe buy a rental property in Texas. So they were asking about, the Houston market and things like that. I said, hey, I'll just tell you what I know. And if that's of some use to you, great. And I told them, feel free to reach out anytime, any place. Um, here to be a resource in any way I can.
So
Um,
James, what's that email address for our
sure.
listeners if they want to reach out?
Sure. It's the word email spelled out, followed by my last name at gmail.com. So email Ledbetter, all one word, all spelled out, email Ledbetter at gmail.com. And if
Love
somebody
that.
wants to reach out, I can share my cell phone number with them. And it'd be a treat to hear from somebody that might have questions. Certainly, I won't think any of them are dumb whatsoever. And maybe I can give them food for thought, something that might help them if they're sitting on the sideline, help them to feel like, hey, um, the, you know, I need to. I've been paralyzed. I'm ready to take that next step.
Well, I totally think that, a couple of our listeners are probably going to take you up on that offer and shoot you that email and let you know that this has been a great interview. I know I'm feeling a little bit more inspired just by the long-term focus that you've had on your journey. And I'm sure a lot of our other listeners are thinking the same thing, like, hey, if he can do it, I can do it too. So you guys know the drill. If you guys like content like this, if you guys enjoy the podcast, make sure to hit that like button, make sure to subscribe, make sure to leave us a review or send us a DM. James and I love getting messages from our listeners out there. We appreciate it so much. And the way that you can give back to us is by clicking one of those links in our description or by leaving us a review, Apple, Google, Spotify, and all of that. And with that, we'll see you next time.
See you.
Peace.